Hi, it's Kirk Lynch, and we'll spend a few minutes talking about debits and credits. And so we have a few rules about debits and credits. These are the things that are universal. And first of all is that debits are always on the left side, and that'll become more clear what we mean by the left side as we start actually using journals and T accounts. Credits are always on the right side. Some of our accounts are increased with debit entries, and some of our accounts are increased with credit entries. If an account is increased with a debit, that means it gets decreased with a credit. And if it's increased with a credit, it will be decreased with a debit. And whatever entry, debit or credit, makes an account go up, that's also known as the normal balance of the account. So those are some general things there just to get us started. And so we'll move on here to understanding which accounts are increased with debits and which accounts are increased with credits. There are multiple different ways of remembering this. One of my other videos talks about a jingle. I've seen different YouTube videos with different things that help you remember this, but this is one I have kind of fallen back to as my favorite. And you'll see across the top here we have our expanded accounting equation, which we've talked about previously. Assets equals liabilities plus owner's capital minus owner's drawing plus revenue minus expenses. Now, as we know from algebra, we can rearrange variables on each side of the equal sign. And if we rewrote this equation so that we did not have any negative signs anymore, it would look like the second line there. Assets equals owner's drawing plus expenses. Assets plus owner's drawing plus expenses equals liabilities plus owner's capital plus revenue. And then we have an arrow going down to a thing called a T account, which we're going to be more familiar with going forward as well. But if we use that T account and we put the elements that are on the left side of the equal sign on the left side of the T account, and the elements that are on the right side of the equal sign on the right side of the T account, we then have determined which accounts are increased with debits, those that are on the left side, and those accounts that are increased with credits, those are the ones on the right side. And so if we keep this in our notes and we can refer back to it, this might help us as we learn how to journalize and record account transactions and which ones get debited and which ones get credited. And along those lines, for now, this will change down the road as we learn some more and move into chapter 4. But for now, as we journalize transactions, 4 of these elements that we talked about up here, there are 6 elements here, but 4 of them, owner's drawing, expenses, owner's capital, and revenues, they are only going to get either a debit or a credit, not both. Assets and liabilities are the only ones that will, at this point, be able to accommodate both a debit and a credit. And so this little reminder here says that the drawing and expense accounts, for now, will only have debit entries. And so these accounts will only be increasing. The owner's capital and the revenue accounts will only receive credit entries for now. These accounts will only be increased with credit entries. And assets and liability accounts can have both debits and credit entries because they will both increase and decrease as we do transactions. That's enough for now, and I'll catch you on the next one.